Good morning, everyone, and welcome to this live trading webinar. Roland said, good morning. How are you doing, Roland? Larry, welcome to the webinar. Good morning, good morning. Mladen said, good morning, Theo. Good morning, everyone. Good morning, Mladen. Janice said, good morning. Good morning, Janice. Maria Julia said, good morning, all. Good morning, Maria. Loic, bonjour. Welcome to the webinar. Ibrahim, all the way from South Africa, said good morning to you and good morning to everyone. Good morning, my friend Ibrahim. Roland, Euro JPY, lost in sky. That's correct. Maybe a valid breakout. Isaac said good morning. Good morning, Isaac. Mr. Carlos, how are you doing, Carlos? Nice to see you again. Olive, good morning, everyone here. Good morning, Olive, and thanks for joining our webinars. Aviator, good morning, Theo. It's been a while to see you here, Aviator. I hope you're doing well. I remember you used to join before, or maybe you are still joining in. You don't say anything. You didn't get the link for the webinar. Oh, how is that came? All right. So, risk warning, as usual, this content is for general information only and is not intended to provide trading or investment advice or any kind of personal recommendation. Guys, weekly fundamental analysis, you can find it under the analytics section on the website. And for new traders, please make sure you download the mobile application. Ready to explode the markets. Remember, today is Friday, and I'm not saying that so you start jumping up and down and yeah, it's Friday. No, it's just towards the middle of the August. Many bankers and hedge funds, they take their annual leaves. So from today until the next couple of weeks, we will expect, and also in the next couple of weeks, we will expect minimal activity in the market. And what I would like you guys to understand is that liquidity usually dries up around this period. What does it mean for a retail trader? That spread tend to be wider than the usual. So intraday trading activity is good to keep to minimal, and that's coming from an experienced trader and not from any textbook. Okay, so be careful with that when you're trading, especially around market open. The liquidity until the market they start functioning anyway, we're going to have, let's say, maybe we're going to see more gaps this period of the time. Maybe we're going to see wider spreads, so keep that in mind. Prem said good morning. Good morning, Prem. Aviator, I'm Ruben. Oh, you're Ruben. Okay, so today you joined from the from the YouTube. Okay, no problem. X-Man said good morning. Good morning, X-Man. So pound US dollar. What a surprise yesterday. Yeah, price came all the way to the downward trend line and found a lot of selling pressure. At this point here, it was an intraday strong resistance, and price sold off. This level was very strong because it consists from a broken support, acted now as resistance, downward trend line. I'm sure if you plot some moving averages, maybe the 20-period moving average will consist at this level here or somewhere around this area. where also can be used as a dynamic resistance. Price printed bearish engulfing, as we see. And maybe we will have a little bit of regain momentum to the upside and the sell-off to be continued. If you check the weekly chart, price now is trading below the 10 weekly moving average, and that's bearish. Intraday activities, I will be looking, if I was trading intraday, I will be looking to see price to lower over to the downside and then start looking for shorts, unless you plot Bollinger Bands, and there is a powerful strategy that for any weakness of the upper band can be utilized for selling opportunities. Next one, Euro US dollar. Price tried to push above and beyond this downward trend line. The broken upward trend line act now as a downward trend line, and price found much resistance here, as you guys see. So it sold off, and we do expect to see continuation to the downside. William said, good morning, Theo and everyone from a sunny Belgium, sunny in brackets. Okay, imagine if in Cyprus I can see clouds now. I'm just look out of the window. In other countries, what kind of weather do you have there now? Rudolph said, good morning, everyone. Good morning, Angelo. Bigger breakfast. Good morning. Good morning, Angelo. Joshua, greetings from Tasmania. Welcome to the webinar, Joshua. Chidalu said, good morning, Chidalu, and welcome to the webinars. Next one, Australian dollar against the US dollar, and no surprise at all, we draw this resistance line here, the horizontal one. Price retested yesterday and sold off. Now, please pay attention to this. I said that yesterday, but the more I repeat, I believe the better you understand and you will believe on that, because I find it extremely difficult for after coaching traders to believe the price behavior, not to read the price behavior. You read this price here, as you see, but it's like, what happened? What really happened? And can you accept what happened yesterday in the market? And this price appeared here. While we had the webinar, yesterday we saw the candle was it opens there, was something like this. It was a strong bullish candle yesterday, like this. So we said that we can look for longs, but we do have this area of resistance. And at areas of resistance, two things can happen. Instantaneously, the market can push higher and maintain higher prices and close higher, like we have on the Euro JPY. When we check the chart, you guys see that. So on the Euro JPY, that green candle or white candle continue, and until the end of the daily session, it closes above the resistance. That's the one occasion. The other occasion is we see bullish momentum, and at this point here, where there is a resistance identified on the chart based on the past behavior, there are sell limit orders resting at this level here, and all are waiting to be executed once the price tap into this level. along with the sell limit orders sitting and resting here, there are also traders who bought anywhere at this point, and they have a take profit targets right at this resistance. What does it mean? A take profit when you are long or when you buy, it's a sell limit order. It's a resting order that once the price touches that price level, the order will be activated, executed, and it will get you out of the trade. To get out of the trade with a take profit target, while you are a buyer in the market, you are ordering the platform to sell the position on your behalf. So when you take profit here, you execute indirectly a sell order. So that's another factor that adds weight to the downside. Did you guys understand this? It's very important. It's not only the people who are looking to sell once the price reached this level, it's also the traders who bought and they are looking to get out of their trades, and they add weight into this sell momentum. And the last one is the traders who are buying at resistance. And these traders, they get filled, price moves a little bit higher, and then the market decides that it's not where it wants to trade it, and it's not backward. Now, what I just explained, it can be seen on the chart as a 1 or 2 candlestick patterns. One candlestick pattern, it's the shooting star or this long shadow left behind. And the 2 candlestick pattern, it's the bearish engulfing. Price moves higher like this, bullish, and then opens here, price move higher and takes the low, like we will see on the crude oil once we analyze that just in a while. Guys, is that clear? Now, where is the issue with the traders? While they see the bullish candle moving towards the resistance, they haven't been told to anticipate the moves. I want you from today to start anticipating the moves. If you guys trust me on that, if you guys start anticipating moves in the market, you will find it very simple and easy to execute your trades without feeling fear that you may gonna lose the trade or any other destructive thoughts. So if the price moves upward, I anticipate selling pressure at a level of resistance. So if I see rejection here on the lower time frames, if I'm trading lower time frames like the 1 hour chart or 30 or 15-minute chart, whatever, if I see this rejection here, I will trust my analysis and the level I put on the chart. So I'll maybe looking to sell. And here it was, this one I ideally was the trade, but if you place a sell an entry here, if you sell there and you put a stop loss there, this is very long candle. For intraday trading, you barely make 1-to-1 until the end of the session, the daily session. So ideally, this bearish engulfing here, we start monitor the market if we have the time and we trade on the lower time frames. This bearish engulfing here, was the ideal signal to take based on strong price action candles. Now, why I don't trade this candle here? Because if I enter short with a stop loss of 100 pips, the average move of the price on a daily basis, it's 70. Ideally, I would like to 70 pips. Ideally, I would like to have a stop loss around 40 or 50 pips on the Australian dollar against the US dollar, because it's likely to get into a winning trade if the market moves, if the price moves in my favor within the next couple of days, or max by a week, to get 2-1 or 3-1. But with this scenario here, the reward to risk ratio act now as a barrier to take the trade. On a trading plan, I told you on the trading psychology session that a trading plan, it involves not only how we enter the trade, but also it involves the risk management. And under the risk management, it's the risk reward ratio. Next one, New Zealand against the US dollar. Bearish engulfing, unbelievably strong bearish engulfing candle. Break. So although this, we commented yesterday that it acts as a reversal pattern, this inside at support, but remember, we said that there is a trend here, there is an identified downward trend line, and there is a long way for the price to create trend reversal. First, we have to break outside of the trend line, and we have to see a series of higher highs and higher lows. In this case, price at the trend line sold off, and it pushed lower and broke below the recent support area. So we do expect to see a move towards this new support. If you are trading intraday, based on the daily chart and the 4-hour chart that we are in a downtrend, we would like either to use the Bollinger Bands and sell from the top, target the middle, or to wait for, if we use moving average, to wait for this, the fast moving average to cross below the slow moving average, and looking for lower lows and lower highs and sell there. There are multiple ways to trade, to execute the trade after you identify the trend. Christian asks, hello, what platform you use TradingView? Currently, I use the MetaTrader 5, Christian. Musonda said, watching from Zambia. Wow, that's great. Maria said, I will hit the beach soon. Okay. Aviator, also the stop loss, correct. USD/JPY, skyrocket. Yesterday, we mentioned about the agreement between weekly and daily chart, and of course for our chart, and series of higher highs, higher lows. Price reached this clear level of resistance. What do we expect? Right now, as retail traders, as smart traders we do nothing. Unless you bought from somewhere here, that was the 38.2% fib retracement, aligned with this swing high. I didn't buy it because I don't buy from 38.2% on the fib. I prefer deeper retracement, but in a strong trend, we see price makes for a shallow retracement. So at resistance, unless you bought from the bottom and you took most of the profits at this area and you just have a safe trade, break even, and you anticipate a breakout. Otherwise, we wait for the price to either break to the upside or reject and go short. USD Canadian dollar, remember guys, I mentioned yesterday, that's a strong area of support. Price, once it bounces here, we do expect to push higher. If you were trading yesterday during the New York session, the trade was right here. Crystal clear textbook example, bullish engulfing. That was at the 3:30, I think, not at 3 p.m. So 3 p.m. broker time, right at the New York session open. 1 hour later, an inside candle, and then a strong bullish engulfing signal the buying order for those who trade. This one, USD CHF. I'm still waiting for the price to hit the 61.8. This area here, and then I'm out of the trade. So I'm still bullish on that one. Euro JPY, see this strong breakout. Now, that's a breakout. Is it a valid breakout? We don't know. At any point, sellers can force the price to a false breakout. So I anticipate a false breakout here, but I also anticipate a valid breakout. Therefore, I'm confident if I see bearish engulfing price action today at the close of this daily candle, on Monday, I will be looking to sell. But if not, and there are two candles, two green white candles close above the support, I will be looking to look for longs in this market. Remember, I was extensively explaining you all the way from this point here and there what was happening with the price. You can refer to the previous webinars and you can watch the analysis on the Euro JPY and why we didn't enter short from this one here. Okay, it's not enough to find some courses left and right or to watch on videos on Google, on YouTube about how to trade. Here, because you have the privilege to learn from an experienced and active trader, you can learn exactly how the Forex market moves. When we trade stocks, totally different thing. But because most of the analysis you see on the currency pairs is due to stock trading learning, not necessarily due to active Forex trading, there is a little bit of misleading and misunderstanding on how to trade. Next one, pound JPY at resistance. We also anticipate the reaction here, and we'll see what's going to happen. Australian dollar, JPY, even the Australian dollar outperformed the JPY yesterday, but if there is something we can play around today, maybe it's a little bit more move on the Australian dollar JPY to the upside. Canadian dollars against JPY, it has room to move until this resistance, and the Kiwi JPY, extreme weakness here, extreme weakness. And based on this analysis we saw so far, I think the Euro New Zealand is in a strong uptrend, as of course it is. Why? Because the Kiwi identified as the weakest currency and the Euro identified to be very strong. So price made higher highs and higher lows. I don't usually look at these pairs, guys, because there is a lot of pairs, the majors and the Japanese yen, plus the commodities and the indices. So they make a lot out of my watch list. Hi, Yao. Thanks for joining us. Good morning. Joshua asks, can you talk about the ATR? Ruben, 3 minutes to market open. William, 5 minutes to market open. Yes, thank you guys. We'll check it out. I will talk about the ATR. Just bear with me. Gold. Yesterday, another bearish close, lower highs, lower lows. We do expect the market to behave in a cyclical way and push a little bit higher before it retested this area, 1900, extremely strong area for the gold. WTI, bearish engulfing at resistance, false breakout. What did we say all this morning? Market close higher. Yesterday in the morning, we saw higher high, but until the end of the daily candle, snap beyond the snap below the resistance and gave this bearish engulfing. And if we observe what happens, this is the times we want to observe the indicators. We want to observe the RSI and the stochastics and the MACDs when the price is after an extensive trend reaches an area of resistance in an uptrend. Okay, so lower highs, higher highs, disagreement. That means the momentum indicator shows some exhaustion in this last move. As I told you in previous webinars, how to read the RSI and any indicator for divergences. So negative divergence, as we explained, we do expect the market to correct. Now, why we expect a deep correction? Because at this point here, buyers, they try to step in after this bearish engulfing. They didn't move a lot. And then sellers, they step in, and then buyers again, they rescue the prices. And after this, this strong bullish bias, the market should explode much higher. But after a breakout, bearish engulfing. So it shows so much of weakness in this market. 2 minutes for the London Open. Let's check the DAX daily chart. Nice rejection as per this price action here. So for our chart, there is kind of support here, but it can really break to the downside. Here is my sell stop. I place a sell stop below this one here and a buy stop up above there. So if price break to the downside, and I hope it's going to break to the downside because it will be in line with the daily chart, the daily chart's price action, I will be happy to take it short. Echo Mama said, good morning, DAX, DAX, DAX. Okay. Market opens. Let's see which order is going to get filled first. So why did we place the orders here? Because they are obvious major swings on this 5-minute chart. Guys, what I really want you to pay attention to, understand that you have to anticipate the price move, and please stop reacting in the price move. Only anticipate. And trust me, once you master how to anticipate the price moves, the way I teach you, it's not something I hide from you, and you're gonna experience trading from a totally different mindset. I can't stress it out how helpful it's going to be for your psychology while you are trading. So far, we haven't get filled in any order. I will check a few more commodities. Silver, still bearish on this one, lower highs, lower lows. I would like to see some correction before I can consider to sell. Coba, bearish engulfing yesterday. It was an indecision candle, as you see here, and that's a good signal for shorts. I like it. I might get into that. Bitcoin. Let's see what's going to happen here. I'm overall, in general, I'm bullish on the Bitcoin and on the cryptos. To be honest, I invest a lot on them because that's what I like. DAX haven't get filled in the trade. In the next couple of 5-minute candle, we'll see what the market decides. Now it's coming towards the entry and likely we're going to get filled. Yep. Have you noticed that in previous trades we take, once the market hit the sell stop order or the buy stop order from the volatility and from the liquidity, the price, the entry price moved beyond, but today it just touched it and it didn't move it at all. So that's what I mean by this period of the year. The trading activity tend to dry up. Nasdaq indecision yesterday for our chart, bearish engulfing, then it didn't follow through, and there is a battle here between the sellers and the buyers. I'm still bearish on the Nasdaq, and on the intraday basis, I look to sell it yesterday as well. DAX. It was a little bit choppy entry here, to be honest, because our swings are very messy. It's not like this one here. You see there is a sequence in the market. Anyway, if price comes up to here, I will get out of the trade, of course. By the way, I have to delete the buy stop order. Price comes here, I scratch the trade. Guys, by the way, on next Tuesday, it's going to be next week. We have a public holiday here in Cyprus, and I will be away for a few days. So Monday, Tuesday, and Wednesday, we're not going to have the live trading webinar. So I will be back on Thursday, I think 17th of August. Okay, it looks like it's just playing sideways. Again, price comes here, I will scratch the trade. If continues drop, I'll keep the trade open. Of course, here there is plenty of room. All right, guys, I will leave you with that for today. Remember, if you're going to trade Monday, Tuesday, Wednesday, many major banks, especially on Tuesday, they will be closed due to the 15th of August holiday, especially in Europe. So be careful with your trading, with your entries. Understand that the market liquidity tends to dry up around these days, especially, and for the next couple of weeks. So be patient. September It's one of the it's a good month for trading actually. Then October, November, December for commodity trading. Based on my experience, it's also good months. We're going to have a lot of opportunities. It's just this month, it's a bit, the markets are a bit sideways. So I wish everyone to have a fantastic day ahead. Thank you so much for your participation. I hope you gain a lot of value. Please remember to like and subscribe on the webinar and like the videos. And also, for those participating in the Zoom, please kindly leave a feedback. How do you find the session so far? If you want to say anything, remember all feedbacks are anonymous, and then and there, if you leave feedbacks, it helps me to understand about the progress of these webinars. Thank you so much, guys, and bye for now.